What's up, guys? Just did a video about Dallas County, but let's talk about something that's front of sight, front of mind for anybody that's following the real estate industry across, or the real estate market across the United States. That is interest rates. Now, you probably saw this week, today is May 6th, excuse me. You probably saw this week that the Fed says that they are raising rates by 0.5% or 50 basis points. Now, that's not gonna hit the market tomorrow, but it is gonna be rolled out over the next several weeks. What that's going to do is essentially it's going to do a couple of things to buyers. It's either going to lower their buying power because now they can afford less, both from monthly and what they're pre-approved for. But it also could knock some people out of the market for two reasons. For the lower end or people that barely qualified, they're going to be knocked out of balance where their ratios are off and they can't buy in general. They just can't do it. Now there's another conversation of being knocked down in buying power or buying range and then being happy with the product that's there. So I always tell people that if you're looking and you think that you've got a Ferrari taste and you find out that you can no longer afford said Ferrari, a Honda Civic or a Ford Mustang may be a great car, but it's not a Ferrari. So there's that balancing act of having that buying power knocked down and still being happy with the product of the home that you're actually purchasing. So that's what we're expecting there from interest rates going up. And as hard as it is to stomach, because I'm actually me and my wife are purchasing a new home, closing in the next couple of weeks. Interest rate is no doubt higher than what we have on our current home that we're selling, but still within our price range. It's really what needs to happen in the market. We have a huge disproportionate or a huge imbalance of what the number of available homes in inventory, both existing and new construction, and what we're seeing as far as the number of buyers that are vying for those homes. One of the biggest factors in why we've seen crazy bidding wars, over asking, fully waived appraisals, no contingencies, is because there's so many buyers that are competing for just a small number of homes. Now, interest rates don't create more homes, but what it does do is it pulls enough people out of the market so that hopefully we will see properties stay a little bit longer, and you're hopeful on the buy side, not so much on the sell side. But you're hoping that builders and other projects and things like that can catch up so that more inventory will actually be on the market. So it's going to thin out the herd or spread those offers out across more actual inventory. But we are going to see a drop off of people that are willing and able to buy right now. Now, what does that mean for sellers? For sellers, the market dynamics or the offer dynamics that you may have heard about your neighbor down the street that got 15 offers and you saw that they had all these appraisal waivers and things like that. I don't think some of those conditions are going away. Appraisal waivers, I believe, are probably here to stay for the foreseeable future. But instead of getting 10 to 15 offers, that may be distilled down to 4 or 5 very, very strong, but very similar offers on what you're seeing. It's what we're seeing in our listings. It's what we're expecting will continue through the next couple months. Looking forward, I don't work for the Fed, and I don't know if I had a crystal ball, I would not be selling real estate. I'd be sitting on a beach and counting money somewhere. But what we're expecting, or what those that are much smarter than me are expecting, is that we are going to continue to see interest rates go up through the remainder of the year. A 0.5% increase before June and July will put us mid-year in, like I said, the mid 6s to low 7s for a lot of people. I would not be shocked if we end up at the end of the year very close to 8% interest rates. And I know for a lot of people that may be stumbling across this or talking to people that have been in the industry for 30 years, or maybe those that bought a home 20 or 30 years ago, they tell me, Aaron, well, when I bought my first house, the interest rate was 12%. And well, yes, Tom, Judy, Frank, and Susan. However, that same house was $60,000. So 11 or 12% on $60,000, not as crazy as 8% on $550,000. So not exactly the same scenario. Yes, it is a very average interest rate at the mid 5s. It's what the market needs, and needs to take some of the buyer pressure off so builders can catch up. But they're not going anywhere. We will probably see this is going to stay for a while. The biggest interesting point, in my opinion, is that based upon the overall economics and the economy of the United States, we are trending very recessionary. It looks like there is a recession looming. There's a lot of signs that say that. Now, the Fed's going to have a tough time, in my opinion, because we're going to have to keep interest rates high, if not artificially high, to continue to take some of the cash out of the market across all the different sectors. However, when we get to a recession, most of the time, the natural response is to drop interest rates. So it'll be interesting to see how the Fed handles that balancing act of not dropping them too soon or keeping them much higher than they need to be in the hopes of taking cash from the market. So it'll be a balancing act for sure. Things, I believe, inventory is going to can remain to be pretty tight over the next several months, but we'll see what happens. But all that to be said, people still need to move. Companies still need to put money to work. And at the end of the day, I still truly believe that real estate, even with a higher debt servicing, is a better return than the securities or bond market. So I am not a financial advisor. This is not financial or investing advice. Have to say that as a disclaimer. However, that's the opinion of one man and the conversations that I'm having with my clients. And so hope this is helpful. We will see if I'm right, wrong, indifferent, but would love to hear your feedback, want to hear your thoughts, your questions, and for all things real estate in Dallas-Fort Worth, my team and I at Caldwell Banker Realty would love to be a resource for you. So y'all be good, y'all be blessed. Share the video, like it, subscribe. Would love all three of those. So appreciate it. Y'all be blessed.